Right, good evening, everybody. Good evening, good evening, good evening. How's been our day? How's been your day? How was last week? I believe you're learning. You know what is important now is that you should be learning and be practicing, be learning and be practicing. Okay, and I want to apologize that for about a week now, I've not recorded any video for you, and largely because I was doing offline trainings and doing one or two other things. So I'm so sorry. Okay, this week I'll record more videos for you, or sometimes I can call you to join me on live class so that I can learn and share one or two things together. Okay. So today I want us to go further based on where we stopped, and I'd like to understand that as far as this class is concerned, every of every new class is building on the previous class. The classes are not disjointed, they are not independent. It's a continuous and progressive teaching targeted towards an end result. So we are going somewhere. And that's the reason why we named the video sequentially. Mentorship with Don 1.0, 2.0, 3.0. I think we're about 13.0 now. Yeah, I think 30.0 or so, or 12.0, 13 or 12.0. So that tells you that look, is a progressive thought. It's a syllable that we are following, and then until we you see, so you don't jump a class, you don't jump a video, you know, and that's the essence of you know following a syllabus and making sure that I do enough teaching on at every single phase. We've learned a lot, we've shared a lot, but then we're not done yet. Okay, I just hope that we can hasten things so that we can conclude this class and then move on to other things that we can start teaching some other things that they're not only technical but also psychological. Okay, um, so so um, today I want to share with you. I want to begin to share with you my 20 most reliable reversal candlestick patterns. I remember a couple of years back, you know, I had, you know, I memorized about 40 reversal candles, 40 of them. That, you know, at the point years back when I wake up in the morning, you know, first of all, before I sleep, I will have put beside me, you know, a plain sheet of paper and a pen, so that when I wake up in the morning, the first thing I do before my leg reach the ground from the bed is to pick up the pen and paper and try to recall the 40 candles I memorized. I'm just trying to make sure that I push those candles to my long-term memory so that when I see them on charts, I'll be able to quickly identify them and take trade based on their formation. Okay. But then I've been able to sieve and reduce them, you know, in quantity. Now I have 20, and even this 20, 10 is bullish reversal candle and 10 is the bearish reversal candle. So I like you to pay attention. I like you to pay attention, very strong attention. Each of these candles are important. Each of these candles are significant. Okay, so let's go. Now, first of all, I need you to understand that at every single moment in the market, two forces are at work. The forces of the bulls, the force of the bulls and the bears. The bulls and the bears, meaning the buyers and the sellers. You know, for those somebody who doesn't know the bull are the buyers in the market, the bears are the sellers in the market. Every single time there is, you know, there are bulls, those who are trying to buy the same market. At the same time, there are bears, those who are trying to sell the market. You know, but when the bulls are having upper ends, you will start to see green candles, and that shows you strong upward price momentum. When you start seeing green candle, based on your choice of colors, actually, when you start seeing bullish candle, it means the bulls are having upper hand, they are gaining upper hand. It means the volume of fund that the bulls are putting into the market is much more than the volume of money the bears are putting into the market, because market goes in the direction of volume. Market goes based on how much money is put into it. It's a real market. It's not a synthesized market. You know, for example, a derivative is a synthesized market. It's based on algorithm. It's not based on the volume of money put in the market. But forex market is based on um volume of money. It's based on you know how much money the bulls are putting into the market to push the market to the upside. But derivative is not like that. Derivative is based on programming. It's based on algorithm. Okay, even though market can be bullish, can be bearish on it too, but it's not based on how much money, because see, what you trade on derivative synthetic indices is not the currency of any nation. Which country is spending volatility 10? Which country is spending crash 1000? Which country is spending step index? So they're not based on the volume of money put in the market. They're based on algorithm, they're based on programming, so you're just trading against a program, which can be quite interesting. I've had people who have made fortune. I've seen people who have made fortune. I've had students who have built house and bought lands just by trading the synthetic indices. I'm telling you, I'm telling you, I'm telling you, I'm always inspired. I'm always happy when I see my students. I've seen, when they trade and make money and do a lot with it. So I've had a few students like that who are doing phenomenal. Just trading crash and boom. Very interesting. Maybe one of these days I want to teach you. Maybe one of these days I will teach you strategy on how to trade crash and boom. Just crash and boom in strategy that will always work for you. Yeah, but I don't really trade that because it requires to sit with your screen again and again. But it's fun. It's fun. It's fun. It's fun. It's very interesting. We traded it and then we still make money. Sometimes I just say, okay, I want to make one to crash and boom. Just look for the same strategy we looked at years back, and then we're still using and still functioning very, very well. But that's not for the purpose of today's class. Now, the reverse is the case. When the bears are having upper hand, okay, bears are having upper hand. When the bears are in control, you will begin to see red candlesticks, and that shows strong momentum to the downward price movement. Okay, depending on your choice. Actually, see, when I say red, some people may not use red, but if you're my students, I've shown you that I just use two colors. My bulls candles are green, my bear candles are red. Okay, some use blue, some use orange, some use based on your choice. You just need to understand the open and the close of the candle. Okay, that's what matters. So my point now is that at every single phase in the market, there are buyers, there are sellers. When the market, when we have more buyers in the market with bigger volume of funds, market will go bullish, and we have, more volume to the downside, to the bear side, market goes bearish. Market, price drops down. Okay. Now, very important point. Before you start looking for reversal candle, you should look for your area of interest, AOI. Some people call it area of value, area of interest. So that it will be your trend line touch, your trend line breakout, or your support and resistance, or your Fibonacci retracement. So there is a particular area where my interest is. So when these candles are formed on the area of interest, that is where they're important. Reversal candles are only relevant on the area of interest. Please take note. Because reversal candle can be formed anywhere on the charts. You cannot follow it when they are formed anywhere on the chart. You follow it when they are formed at your area of interest. The places you have marked out first of all, because you don't just jump on your chart I'm looking for this candle, I'm looking for that candle, I'm looking for this candle. They said this candle is a reversal candle, so anywhere it appears there be reversal. No, sir. No, sir. They are only relevant on the area of interest. They are only relevant when they are formed on the area of interest. Never forget. Now listen to this. General rules. General rules. The higher the time frame, the stronger and the more reliable the reversal candlesticks are. I'll take that again. The higher the the higher the candles, the higher the time frame, the stronger and more reliable, and the more reliable the reversal candlesticks are. Meaning, the reversal candlesticks you see on 15 minutes time frame is stronger than the and more reliable than the one you see on 5 minute time frame. And the reversal candle you see on 1 hour time frame is stronger than the one you see on 15-minute time frame, and so on. Meaning, if you see the reversal candle on 4-hour time frame, it's much stronger than the one you see on 1 hour time frame, and so on and so forth. It's very important, very, very important. Why? Because see, the lower the time frame, the more the noise, the more unreliable the reversal candles may be. Okay, so let's go further. The first set of candles I want to be introducing you to are called the doji candlesticks. The doji. Somebody said doji. Say doji. Doji. I didn't say doji. I said doji. Very important. The doji candle. And we have 5 variations of doji candles. The doji candlesticks have 5 variations. 5 variations. And they are on the board. They are on my screen. The common doji. I used to call it simple doji sometimes. If you attended my physical class before, I call it simple doji. The common doji. Okay? Then we have the long-legged doji. The legs are long. It has 2 legs, and the legs are long. Then we have the dragonfly doji, like a dragon that wants to fly. Okay? And then we have the 4 price. Then we have the gravestone doji. The gravestone doji. See, the common doji, the long-legged doji, and the 4 price, they do almost the same thing. Almost the same thing. Common doji, they are very similar in what they mean. Common doji, long-legged doji, and then the 4 price. Then we also have the dragonfly doji, which is a bullish reversal candle. Then we have the gravestone doji, which is a bearish reversal candle. These are how they look like. I have the common doji, I have the long-legged doji, I have the dragonfly doji, I have the 4 price, I have the gravestone doji. Now let's look at them one by one. Very interesting. Very, very interesting. See the common doji, very simple doji. The price opened and then rallied up. The bulls pulled the price to the upside. Then the bears came in, pulled the price down. Then the bulls came in again, they pulled the price up. And by the time, at the close of the market, within this time frame, the price has closed at the same price, or relatively the same price where it opened. Interesting. Same price where it opened. Look at the same thing here. The price opened at this particular price. The bulls pushed the price up. The bears came in, pulled, dragged the price down. The bulls came in again, and then they pushed the price to the upside. And by the time the price is closing, it was closing at the exact price it opened, or relatively the same price where it opened. Okay? Now, let me come to the 4 price. I thought it's very similar. The 4 price means 4 price. It means price in 4 places. What it actually means is that the opening price, the closing price, the high, the low is the same price. That is 4 price. The open price 1, the closing price 2, the high price 2, the low price, the high price 3, the low price 4. They are all the same price. 4 price. So you discover that within this time frame now, nobody is actually winning. Nobody is winning. The price is equally put to the upside and put to the downside. It's the same thing. So here, here nobody is winning. It's a point of neutrality in the market. Equal energy for the bulls and bear. It's a point in the market where the bulls and the bear agree on a fair price. That means the price that the bull is ready to buy is the same price that the bears are ready to sell. They agree. They have come to a term of a fair price in the market. Nobody is winning. So when you see this kind of candle, it signifies something. When you see them in the market. Don't worry, we're going to get into that later on. Look at the dragonfly. Dragonfly is the bullish reversal candle. Look at what happened. The price opened here. The bulls pulled it up a little. The bears came in and dragged the price down, 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 down. And the bulls came in at the end. Bull came in at the end. The price is going up. Then by the time the price is closing, it was closing almost at the same price it opened. But then, who did the final job here? The bulls did the final job. Since the bull did the final job, it's like the bulls want to win. That's why it is a bullish reversal candle. Bullish reversal candle. And don't forget where their form is very, very important. Look at the gravestone doji. Gravestone doji. You see, the price opened, the bears took the price down, the bulls came in, dragged the price to the upside, and the bears came in again to do the final job, and then they closed the price almost at the open price or open price. So who did the final job here? The bears. So it's the bearish reversal candle based on where it is formed. If you see it as a resistance in the downward trend, it's an indication that you should sell the market. If you see this on a bullish trend, at a support on a bullish trend, is an indication that you should go long in the market. But let's go further. So generally, it is a moment in the market. Doji generally is a moment in the market where the bulls and bears agree on the same price. You will see the opening price and the closing price is the same. It's a time of indecision in the market. I love that word indecision. I love it so much. I love it because when I see that the market, nobody is selling, then I'm going to look at who were doing the job before a doji is formed. That means their strength is getting exhausted. You can't tell me you are dragging the price down. All of a sudden, you reach the same price with those who are buying. That means the strength of those who are selling is exhausted. It's a moment of indecision in the market. And at that juncture, price may want to reverse. Okay? So let's go further. Common doji, long-legged doji, and fall price. When you are in an uptrend or downtrend, watch out for these three variations. It may indicate the pullback is over and the price is about to go in the direction of the main trend. Now, look at it now. Because I said you see it on uptrend or downtrend, that means you can see common doji anywhere. It's really because it's neutral. You look for it in both uptrend and downtrend. You look for it in both uptrend and downtrend. You look for common doji, long-legged doji, and the fall price on both uptrend and downtrend. That's not the case on dragonfly and gravestone doji. So let's go further. Now let's look at this dragonfly doji, and this is how it looks like. This is a bullish reversal candle where the open price and the high are the same. Though price attempted to go lower but couldn't sustain it, dragonfly signifies the end of a pullback or bearish trend exhaustion that can lead to bullish movement. Note, you should be looking for dragonfly doji in an uptrend to go long. In an uptrend to go long. So it's a bullish reversal candle. When you see it in an uptrend, it's an indication that look, get ready to start buying. See what happened? The price opened here. The bears put the price down. They put the price down. And the bulls came in again. They are the one doing the final job. Don't forget, I'm always using the word final job. Who did the final job at the close of this price? The bulls are doing the final job. It means that they have the latest strength. And they may want to push it further to the high side. You see it here now? The price close here. And then the bulls come in. So what you do when you see this kind of candle, you don't just enter immediately. There are two. I've explained to you before that there are two kinds of trader in the market: the aggressive trader and the conservative trader. I bet with you, an aggressive trader, after seeing this doji, this dragonfly doji, it will enter a buy straight. But you see, a conservative trader will wait a little and see if another candle is going to form and going to attempt to go high, higher than the high here. When you see that kind of candle, then it takes its entry or allows another bullish candle to form, and close before entering the trade. That is the conservative trader. Look at the next thing. Gravestone doji. The gravestone doji is opposite of dragonfly doji. It's a bearish reversal candlesticks. Price rally high. Price rally. Price opens here and rallied high, and then came down to close at the same price it opened. Remarkable. Who did the final job here? Those that put the price down to close. The person who did the person who did the final work here is probably to go in his direction, because the bears did the final work here. The bulls put the price up, the bears came in and put the price down, and then the price was closing almost at the entry where it opened. So it's a bearish reversal candlesticks. Okay, very important, very important. So those are the candles I wanted to look at today. I said we have common doji, we have long-legged doji, we have dragonfly doji, we have the 4 price, and we have the gravestone doji. These are 5 candles that you're supposed to look out for. So I want to take you to the chart and see where this thing appear on it. I've already marked out some point on my chart, and where I want to show you where this candle are formed on GBP USD. See here now. This is common doji. This is common doji. You see common doji here. It's formed. The price and look at it. Look at the area of interest. There's a resistance here. The area of interest I was telling you before. Don't forget that these candles are only relevant at the area of interest. There was a resistance here. And there was a pullback into the right resistance. So I've already drawn. When I see the resistance, I've already drawn my zone. If that candle form at my zone, I'm already taking an entry. So doji has formed in my area of interest and my resistance level. So what happened? I take myself. I told you before. You put your pending order at when this candle closes, or at the end, below it, some piece below it, you put the pending order, a sell stop there, and then when it triggers, it begins to sell. Or like I told you, a conservative trader will wait for this second candle and this is how I used to trade many years back, in 2019, in 2020, 2021. I will wait for this candle to close. That's why then, if I give you signal, you don't lose, because I'm very conservative, very conservative. And then I'll wait for this candle to close. Then I give you a sell signal, and then you are winning, and you are winning big time. Okay. Now look at this candle. This is the candle we're going to be talking in one of those classes. It has a different name entirely. This candle, very powerful candle. You can also see it here. It's not doji because the body is big. It's not doji, but it has its own. It's a very powerful candle also. So let's go for that. You see here now. See, this is dragonfly doji. I told you the bullish reversal trend, bullish reversal candlestick. The dragonfly doji, okay, formed at the end of. You can see dragonfly doji. Where is it formed? It formed at an area of interest. Area of interest. My goodness, boy, I love this. Area of interest. It formed at an area of interest. There's a support here. Which this has happened. So I draw into the future in the same area of interest. This is my area of interest. I see a dragonfly doji. And I told dragonfly doji indicate a bullish reversal. My goodness, my goodness. And therefore, I'm waiting. I've seen doji. Is either I enter at the peak of this, or I wait for another green candle to be formed. When this candle gets formed, it's already confirmation for me that price is tending to move to the upside. So what do? Pum! Just take my buy, and I'm just following it up, and I'm cashing out big time. I'm telling you, that's doji. So let's go for that. Then I see another doji here. I see another, doji is here. I see another doji here. This is doji. This is long-legged doji. This is long-legged doji. This is gravestone. This is the gravestone doji. Okay. Also at resistance here. The gravestone doji is supposed, when the market is selling, you look for gravestone doji. When the market is buying, you look for a dragonfly doji. Don't forget what we said the other time. Let me read it to your hearing again. Note, you should be looking for gravestone doji on downtrend to go short. Look at this one. Note, you should be looking for dragonfly doji in an uptrend to go long. So let's get back to the chart. You can see this is gravestone doji, and the market start to sell. Then you can see another long-legged doji here. You see another long-legged doji here. Okay, you see a long-legged doji here. That's powerful. Then you see another this is long-legged doji too. This is long-legged doji too. Then you see it here. So I just wanted to long-legged doji and then long-legged doji. Then you see another doji here. Then you see another doji here. In all those places, you see every time, when you have marked out your area of interest, and then you see that candle form in your area of interest, you see that form in your area of interest, you can actually follow it. See another area of interest. I'm having support. Okay, I'm having support here. This candle look like doji, but this is not doji. It is forming a resistance. One of these who treat this candle is called hanging man. But don't worry, we'll treat it later because it is forming at resistance. Okay, it's a different candle entirely. It's one of the most powerful candles that you can see on your chart. So let's go further. I see another doji here. Okay, this is long-legged doji. It is telling me the ending of the pullback, that the pullback is ended, the market is going to the upside. You see another one here, another doji. Two dojis are formed here. This is another name I'm going to be sharing with you later on. This is another candle, in another reversal candle, that's telling you that the pullback is ending, market is going to the upside. See, the common doji, the long-legged doji and the four price, they are neutral. They are neither for the buy or for the sell. That is why when you see them, you wait for another confirmation before you enter your trade. They are neutral. They're not like dragonfly or gravestone doji. Look at this one too. Look at this candle here. It just tells you that this pullback that is coming is ending and the market is about to go to the upside. Look at this one too. This is dragonfly doji. Okay, it's just telling you that the ending of this pullback is ending. The market is supposed to go to the upside. Okay, this is that gravestone. Okay, then you have another doji here. Then you have another doji here. Gravestone doji. But then the price is moving to the upside. I think we said gravestone doji was to indicate you a sell, but when it's formed like this, I think this is supposed to be okay. When it is formed and indicates the assertion of a pullback. Okay, it's telling you here that the pullback here, this sell is ending and the market is changing direction. So you can see another dragonfly here at this area of interest. This pullback has ended. They don't forget the support. There's a support here, and then history is repeating itself here. So I'm seeing the dragonfly doji that is telling me the price is pulling to the upside. And you see a doji too. This pullback is ending. See dragonfly doji that tell you the market is going to go to the upside. The pullback is ending, and then I'm going to the upside, and like that. See the area of interest. I have this area of interest. I have this zone that I've already marked out in the field, in the past. And then as the market get there, I'm seeing a long-legged doji that's telling me that whatever is coming down here is ending. Market is about to go to the upper side, a reversed side. You see doji here. This is simple doji. You can see all the way. This is another doji. You find simple doji here. You find another doji here. This pullback is ending. Price is about to move to the upside. about to move to the upside. So what you do first of all is to mark out your point. Not all doji. Some of this one I'm just showing you doji. Some of them appear on your area of interest. Don't forget that doji is only important. Whatever, all reversal candle, not just doji, all reversal candle are only important on the area of interest. Only on the area of interest. Only on the area of interest. And then, because they can be formed anywhere, they can be formed. This is a resistance that turned support. Is a resistance here because they pull back. This is a resistance where the price turn back has become resistant, and when it come back there, it has become a support. So I'm seeing a doji here. A doji tells me this pullback is ending. A bullish trend is about to begin. Doji candle, doji candle. You can see there. This pullback is ending. It's going to go up. This pullback between here and here is ending. It's going to go up. Okay, this is the sell. This pullback to the upside is ending. It's going to sell. So when you identify your trend, you already know what you're looking for. You have counted your P1, P2.